Good afternoon, everyone. This is Brian Shannon from Alpha Trends. Let's take a look at this market here. It was another really kind of long week, I guess. The way the volatility was, it made it seem like a long week. If we take a look at a 5-day chart of the SPY first up, we'll see. There was a lot of volatility. We did end with a pretty good percentage gain. For the SPY, we were up 4.7%. Nasdaq was up 6.2, but it didn't come as easily as those numbers might indicate. Again, we're still kind of trying to stabilize here after the large drop at the early beginning of the month, and we've seen one bounce that brought us up to the 122, 121 and a half ish area, and now we're bouncing again. This is the test of the 20-day moving average right in here. And when we look at that 30-minute time frame, what we've been looking at is this trend line here for most of the week, and then we've drawn in this one as well, which defines right now what's known as a symmetrical triangle. Now, typically, a symmetrical triangle is meant to or is identified as a continuation pattern, meaning that it's generally expected to resolve itself in the direction of the primary trend, and the primary trend is clearly lower. So that's what it's supposed to do. It doesn't mean that that's what it will do. Again, technical analysis is a tool. It's not a system or a roadmap for what will happen. It's a guideline of here's what's possible. Now, what's also possible is that we're going to just trade back up to the high end of the range that we saw from last week, and the market just kind of continues to be neutral a little bit. But we did have a pretty good little shakeout here this morning, and once the market really got back above that volume weighted average price in there and cleared S1. Well, actually, it almost got down to S2. But once it got back up above the volume weighted average price, I was talking on Twitter about how it had the potential really to be a big upside day because we were recapturing that 5-day moving average. We did hold hold back a little bit right in here, or it seemed like it did at least. It seemed like it took a while to get above that level. And I guess that's this area right here. But we did have a very nice rally, and the market held on to the majority of the gains here as well. So for today, it was a good bull market. Yesterday, it was a bear market, and that's the way this market is. It's day by day. If you're holding anything, much longer than a couple days at the most, really, you're experiencing obviously huge volatility. So next week we're going to want to keep an eye on these levels. We've got this trend line, and then we've got this prior little support in here that we gapped down from, that became resistance over here, this week. So we've got the trend line, then we've got the 119 level. If we can push up through 119, then I think we're probably looking at about 121 and a quarter again, because this has been a level so far that has offered some resistance, and that's where the supply has come back into the market. On the downside, we break back below probably the 116 level, then I think it's time to become much more defensive once again. And the Nasdaq, let's take a look here at the daily chart first of all. The Nasdaq has been trying to battle with this prior support level that it broke down from. Obviously, that's where we had the failure, and we got a nice bounce in here again, 6.2% for the week. And we look at a 30-minute chart, we can kind of draw things the same in here. That is, this is what how I've been choosing to draw the trend line for the last couple of weeks, because to me it's what has represented the essence of trend, and we have more of a kind of flat level of support in here as opposed to the higher lows that we see in the S&P 500 there. But back to the Nasdaq, we take a look in here. This has been an important level, and this will be good to see hold as a first area of support. We'll just call it's about 52.70. So we'll just call it about 52 and a half. Give it a little bit of leeway down to that. But here's what's becoming a little bit of an uptrend. We've got that rising 5-day moving average, and if it can push above there, then I think we're probably looking at about 54 and a half, up again to the top end of this range. And we're same thing here. We've got that 20-day moving average that for now is holding, that the market is holding under. If we get a squeeze higher, the question question is, does this market become like a stock like ERTS that is able to push above and make a run for the 50-day moving average, or South HS that pushes above that 20-day moving average and continues to go. Those are just a couple stocks that I noticed kind of had that pattern. It's not a prediction, but that's maybe something to to keep an eye on. That if it does begin to continue to move higher, then that's obviously you got to listen to the message of the market, and that's what we want to trade is in the direction of what the market's telling us. The Russell 2000, we kind of draw the same, not really off this gap here, but off of this level, kind of defines the trend in there. And then we've got a little bit of potential for resistance just above, actually in a couple spots. We've got this level at 70 bucks that was prior support in here, and that $70 level became resistance yesterday on the call it the Bank of America gap. But that's where we've got initial selling at 70 bucks. Just above that, we'll have the trend line, and if it can push up through there, then we've got probably a move to $72. And this market is similarly holding below the declining 20-day moving average. We've got more of a flat line in here, and this is going to be the more important support. So $67 breaks on the downside, then you want to become defensive, and I think we would probably drop down towards the low end of the range. The semiconductors continue to really be an underperformer here. We take a trend line off of this gap lower, and we're starting, I guess you could say, to battle with that level. We could also take a trend line off of that gap from August 4th, and you can see we've got some clear levels in here as well. That we've got this week's highs basically at 28.70, and this group was the semis were up 4% this week, which is a nice percentage move, but it doesn't change the fact that we're still in a downtrend and actually stuck under the 10-day moving average. So we get below that, above rather, that 10-day, then we probably get a move up towards that $29 area that we saw this prior gap down from, and just above that we would say 30 bucks a share. So pretty much even levels here. That is 28.50, 29, and then 30 bucks on the upside. And on the downside, this has been the bigger level really at about 27 and a half. We had that brief move down below it. But these semiconductors just really refusing to get up and participate. And remember, that's what they did back in here, is they were slow to respond when the rest of the market back in late June was starting to rally. These semiconductors really underperformed and kind of led the rest of the market lower. The financials are in similar terrible condition. They got turned away yesterday at the declining 20-day moving average, again off of that, we'll call it the Bank of America gap, as Warren Buffett came in and made an investment. But these semiconductors, I mean financials rather, they're really more range bound than the rest of the markets. $12 a share up to really about 13 and a quarter. That's where we are. We could also take a look at this and say, if this market is going to turn around and break this resistance near about that $13.25 level, that are we starting to form this little inverted head and shoulders pattern, this of course being the basis of the right shoulder and that higher low. So 12 and a half, we would want to see, if we're looking for a bounce in these financials, we would want to see that 12 and a half level hold, see how it responds up at 13 and a quarter, and if it can push up through that, maybe we get a little bit of a squeeze. The height of the pattern would indicate basically from 12 to 13 and a quarter, a 1.25 point move. That would get us up to 14 and a half. If we take a look at the daily chart, 14 and a half is pretty close to the declining 50-day moving average. So those are the levels we want to be aware of, though. And again, it's too tough to say here's what will happen. You have to take it day by day, moment by moment. Look at those, where the markets are in relation to the volume weighted average price and that sort of thing. Gold had a nice continuation of its bounce that began yesterday, and I still think that we're going to see some of the volatility bleed out of gold. I don't think it's going to start climbing up to new highs, but the trend is definitely remains higher in here, and this gold pushed up above its declining 5-day moving average. So I would be very careful with that. If you're looking, if you're feeling like it's getting time to lock in gains, I would keep a close eye on the gold next week. Uh, Everyone on the East Coast, hope that you ride that storm out and it maybe becomes less than what they've been talking about. And enjoy your weekend. See you next week. Thanks.